how would technically this work? Let's use a couple scenarios. Let's say you're doing cryptocurrency, like you mentioned before. I mean, crypto is the hottest discussion that's out there. But when you're kind of looking through the markets right now, it's a little bit volatile with crypto. I don't invest in crypto, but I think there's some potentials over there. So for someone who is like, hey, you know what? We got a great run, made 1,000x, increase on this, which is possible in crypto. And I want to diversify some into real estate, but I can't find a project yet, or I want diversify between passive investment as well active stuff. How do I do that?
Great question. So step one is you form a trust and you get with our team and you it's all conditional, by the way. You sign a conditional engagement agreement, and that allows us to form a trust, get it set up prior to the exit of the cryptocurrency or the business or the real estate. And in fact, we just closed a cryptocurrency deal for a client. They were selling some Ethereum. They bought it for 100,000 and some Bitcoin mixed, and it went to about 13.5 million. And they're living in the Bay Area. He's working in a big tech company. She's an attorney, and they're like, you know what? We want to exit. Now, by the way, this journey was a wild journey. It wasn't just 100,000 to 13 million overnight. It was like a 6-year journey of just, blood, sweat, and tears, if you will, on looking at the crash and the ups and the crash and the up.
Yeah.
And the reason they didn't sell is because of the tax. And so they call us up and they're like, hey, Brett, if you and your team can solve this, like we're working with the financial advisor as well that I work with at a San Francisco. She's amazing. And we're all working. We're like, if you can solve this, we can solve this. Like we're ready to exit. We're ready to diversify. We want to go buy potentially a cabin on Lake Tahoe. We want to retire from our day job. We want stability versus the highs and lows of Ethereum and Bitcoin. So I said, yeah, what's the steps? Well, step one is we actually form a trust. Step two, we open up a trust account at Kraken. We use Kraken as our main one. Step three, they actually transfer the Bitcoin and the Ethereum to the trust account. And then the trust actually sells it to cash. And the note holder, which in this scenario, they become the lender. This is what's happening. His name is Peter. He lent the money to the trust. In this scenario, we exited 5 million within an hour. Ethereum hit about 3,000. That was his exit price to exit. And so that's kind of the basic mechanics. The smoke clears, the trust bought and sold for the same price, 5 million. They received it for 5, they sold it for 5. So that has no tax. And the note holder, they receive a promissory note. They lent 100% of the 5 million to the trust. Transfer the Ethereum and the Bitcoin for a $5 million promissory note. And this is why this works. This is an installment sale. And as long as we follow those guidelines, they're in a deferral state. And at which point the funds can be invested, stocks, bonds, mutual funds, or again, real estate back into crypto. And they get back to them. The goal is that original 5 million plus an additional 8% rate of return. And that's really kind of it. That's kind of how it works. And then they just pay tax on what they receive. When they receive it, they can pass it to their kids and keep it going. But it's not uncommon. I mean, people do installment sales all the time. Like you might own an apartment complex for 10 million, no basis, no debt. You could carry paper for the buyer, right? You could say, hey, look, you give me 3 million down. I'll finance you 7. I'll pay tax on the 3. But you'll slowly pay me that 7 back over time, and then I'll pay tax on that. You could also do 100% financing, right? If you wanted to, but you would never do that in a regular deal because they have no skin in the game. But in this scenario, you don't mind doing it because the collateral and the trust can be secured against some of the biggest companies in the world. It could be in Netflix, Google, Apple, Costco. It can go back into your own multifamily deals or passively into other deals with partners. It can go back into crypto. So hopefully that's making some sense.